During my discussion with Art Laufer last week, we were talking about Bitcoin, and he said, we really need to add, in terms of trying to figure out what's really going on out there in terms of the money multiplier, add Bitcoin to the monetary base, and we'll get a better picture. So he's already thinking in this way. And I was so happy that he said it. Half of the solution is understanding a problem and understanding how we should try and frame things to understand what's really going on out there. So this idea of adding Bitcoin, which is a little over 500 billion, to the 8.5 trillion in the monetary base, it was a start. And, a start of a conversation, because we do have to deal with the world we're living in. The one you're talking about, I think will evolve over time, but it doesn't happen overnight. You might say the banking crisis is giving us that opportunity, and I think it may happen faster than otherwise might have been the case. But I am going to continue paying attention to market signals. I see credit default swaps settling down a bit. We haven't seen the regional bank index break down again, but it hasn't V-shaped either. So I think that's a risk there, that there's another episode. So we're watching all of this very carefully, and watching the stock market. Now, the stock market is very sensitive to all of this. And it is very interesting for me to watch the stock market levitate through all of this. And I think one of the reasons it is it smells the end of rising rates. It sees over whatever the Fed's going to do right now to much, much lower interest rates because of this deflationary pull from monetary policy and gone wrong, velocity falling, and that's the bad deflation side of it. But then you've got the good deflation side of it, as you said, and I always want to end on a very hopeful note. And the very positive form of deflation we're going to see, if we're right, is going to cause enormous growth in everything blockchain related, in all that innovation, as well as, the other platforms, the multi-omic sequencing, robotics, energy storage, and artificial intelligence. And they're all going to start converging. And, it's messy. It's messy getting from here to there. But I think, again, just the recognition of what can go wrong with the banking system, I think is going to cause more people to seek more insurance policies.
ARK Invest's Cathie Wood, following on from her talks with the renowned economist Art Laufer, believes that Bitcoin is inevitable and its price is heading only one way. In her recent conversation with Balajee, she discusses how she is predicting the market to look past the current period of high interest rates that we are currently in to a place where interest rates are much lower. This will lead to a higher valuation of risk assets such as innovation and cryptocurrencies. Balajee overall agrees, however thinks we arrive to the same conclusion due to money printing and the debasement of currency, which inevitably raises the price of all assets but to a higher multiple the further out on the risk curve. Make sure to stick around to the end of the video where Cathie explains why Bitcoin has now proved itself as a safe haven asset and an insurance policy, and her conviction in it as an investment has only been cemented. Also, only a small percentage of my viewers are actually subscribed. If you enjoy finance content, consider subscribing or liking the video. It's free and you can always change your mind.
Basically, first of all, Cathie, I like you. I'm actually not a doomer at all. I would consider myself at most a doomer optimist or a positive person in general. I always try to have a constructive kind of thing. One thing I just remarked on, again, just seeing this is something which I pay a lot of attention to, because I never would have thought, 30 years ago, 20 years, even 10 years ago, that Indian founders would think of Indian banks as being more trustworthy than American banks. That is a massive world model update. That people are wiring money back home. They're wiring money outside the American banking system because they don't feel like they can go and diligence everything 10Q by 10Q to find the where's Waldo of are they actually insolvent or not? Will my money be there, right? This is the same reason that people are moving money to big banks and money market funds and so on. So I think we're agreed that basically in the flight to safety, the people will choose Bitcoin. Whether you call that contraction and people feeling the flight to safety, whether you think of it as inflation in the sense of the Bitcoin price going up, that is the one number that they can't fake in the system. They can hike rates while printing trillions, but they can't change the amount of Bitcoin. And that hard denominator constrains them, and it's visible to the whole system. Plus, it's a global asset. Plus, it's hard to seize. Now, one last thing I want to talk about, like from a hope standpoint, okay? You mentioned that Florida might do state-chartered banks banking crypto, right?
It's a rumor. There are a number of states, the Dakotas and Florida among them, the states that are trying to attract capital and labor.
Absolutely. That's right. So all these regional banks are getting killed and so on. And in a sense, there's a real deviation of interest between state and local versus the feds, right? And so what I think could happen is bitcoin.florida.gov, bitcoin.texas.gov, bitcoin.mississippi.gov, and bitcoin.montana.gov. All of these states, which, Texas GOP has passed something where it has in its platform the right to buy, sell, send, and receive Bitcoin shall not be infringed. The mayor of Miami takes a salary in Bitcoin. Mississippi and Montana have Bitcoin mining protection bills. Wyoming and Tennessee have DAO bills, right? So lots of these red and purple states. Colorado accepts taxes in cryptocurrency. New Hampshire is pro-cryptocurrency, right? Lots of these, let's say, red and purplish kind of states or pro-freedom states are pro-cryptocurrency. And if they reopen the gold window, okay, if you had bitcoin.florida.gov, bitcoin.texas.gov, where it's like basically a very simple exchange. It's like Coinbase circa 2013. You can buy, sell, send, and receive Bitcoin. You can place limit orders. You've got a fiat USD BTC order book. That's it. And it's set up for you to just take your Bitcoin off the exchange within, a few days, or right away, ideally. It's not meant to be something where you hold it there. They just keep pinging you to take it off, right? And then what happens is the state just takes a cut of that. So they're now accumulating a digital gold position. Okay. Why is this important? Why do I think of this as a positive development? Well, first is, DeSantis and others have come out against the CBDC, but what are they for? They're anti-CBDC, which is digital serfdom. They're for Bitcoin, which is digital freedom. Okay. And so now you can be for something rather than simply against, and you have essentially a Bitcoin-backed local state government, right? Where this is the move against the feds. And then the question is, okay, will the feds, will the Fed try, or the literal Fed, try to shut down FedWire and ACH and other access to these banks? Will they cut off Florida? Will they cut off Texas? I think that's probably a bridge too far. If they did do it, it would show the potential financial totalitarianism incipient in a CBDC. If they didn't do it, well, the fiat rails would be open. And the reason I think something like this is going to happen is it's the next logical step after, for example, El Salvador adopting Bitcoin, mayors adopting Bitcoin, because right now you have the government going and fighting Coinbase and Binance, and that's government versus company. A company doesn't necessarily have enough hit points to fight a government, but another government does. You see in Pacific Rim, to fight giant monsters, you needed giant robots, right? So if you have a state like Florida and Texas with a lot of hit points that is now, that can't go easily bust, that's got a lot of credibility and reputation. And if you have a lot of red and purple states that share their order books, their USD BTC order books, that is now something which keeps the USD BTC window open, allows exit from the system, benefits local states because they can accumulate digital gold, builds upon the existing shall not be infringed, DAO language, miner language, mayors accepting Bitcoin, El Salvador as a sovereign currency, and finally can be internationalized because Nayib Bukele held a meeting of, I think, like 44 small countries, bankers, and have been planting seeds about, what it's like to transition your country over to a partial Bitcoin standard. So you also have this happening globally where small countries like, Palau, for example, that are pro-crypto could do this, okay? If that happens, if the digital gold window is reopened after Nixon closed the gold window in 1971, at the same time, by the way, that China is a totally different animal and they're moving oil and other transfers over to the petro yuan, the biggest difference is in 2008, USD was too big to fail. In 2023, it's not. And if it does go down, we don't want China to be that reserve currency. We do want it to be Bitcoin a freedom currency. And I think that actually the moves that I'm describing, that is like the positive vision of the future. If this system is going to go down, let's have an orderly exit. If you think that the Fed isn't simply piloting in the wrong direction, but actually crashing the plane, how do you make your way to the parachute? And I think that parachute, that exit, is BTC. Of course, you might have a different opinion. You might go and get gold. You might get oil. You might do other kinds of things. That's, not financial advice for people to decide. But I do think that will end up being the Schelling point. I may be wrong, but that's my thesis on why I think we see exit from the US banking system towards Bitcoin over the next weeks and months and perhaps years to come. The exact timeline of 90 days, I don't think it's impossible that happens given how fast digital bank runs happen, but directionally, it's much easier. Timing is hard, prepping is easy. Prep for essentially, just like you prep for COVID, and prepping earlier was better. If lockdown came in 42 days after some of the initial reports of COVID in the US, who knows how quickly digital lockdown comes. This Fed now is dropping in July. So before that happens, build the exits, build the exit to Bitcoin, build the exit to other kinds of things. And I think we have potentially a positive vision on their side. Thank you.
Okay. Well, we certainly explored a lot, and I thank you, Balajee, for doing this. I said, wait a minute, we both have the same positive bias. How could we, on Bitcoin, how could we be so different? And I don't think we are that different in the sense in terms of what we are worried about. So anyway, well, thank you again. And I'll look forward to doing this again at some point when we're at another moment in time that deserves the time we spent doing this. So thank you again.